Greetings, folks. Welcome to the weekly wrap up. It is Friday, October 21st, 2022. Hope everybody's having a great week out there. Really good day in the market. It started out kind of slow. The futures overnight were in the red, but things really took off today. So who knows? Maybe this is the tide turning. But again, knowing we talked about the history of these typical downturns earlier in the week. Typically, they take anywhere from 12 to 18 months on average. So this started on January 4th. So I'd estimate we probably are looking at sometime next year before we really see a real capitulation in the market and things turn around. But all in all, things look pretty good. If it's your first time watching the show, please give me some thumbs up, like, share, subscribe. I'd greatly appreciate it. And let's go ahead and jump into the numbers. The Dow Jones today was up 2.47%. Closed at 31,082. S&P 500 was up 2.37%, closed at 3752. NASDAQ up 2.31, closed at 10,859. Small caps are up the same, 2.31. The VIX fell 0.73. It's currently sitting at 2976. Still quite high, but if it goes lower, down back towards 20, that might be some good news. Canada was up 1.52. Brazil was up 2.3. Mexico was up 1.71. Looks like Europe was more red, but we do have some greens here. Germany was down 0.29. UK was up 0.37. France down 0.85. The Euro Stoxx was down 0.46. Netherlands was flat, up 0.06. Spain down 1.29. Italy down 0.62. Switzerland down 0.52. And Portugal up 0.47. In the Russian markets, both of them were up. The MOEX up 0.9, RTSI up 0.87. And headed over to the Asian markets, a lot more red. Japan was down 0.43. The Australia down 0.8. New Zealand down 0.36. The Chinese markets were kind of split. The Shanghai was up 0.13. The SE component down 0.42. China A50 down 0.49. The DJ Shanghai barely up at up 0.04, and the Hang Seng up down 0.42. Taiwan weighted came in down 0.98. So kind of a mixed day, but here domestically, things looked pretty good. So, all right. Well, first let's dive in and take a look and see how the weekly numbers were for us here domestically. That's the month. Let's go ahead and go to the week. All right. So for the Dow Jones, it looks like it's going to finish the week up 3.36. The S&P 500. Going to finish the week up 3.14. NASDAQ up 3.19. All of them up 3%. The Dow Utilities, not quite as good, up 0.83. And the Dow Transports, let's see here, up about 0.37. So that was probably, but the three major ones all up 3% or more, which is certainly some decent news right now. All right, well, let's go ahead and take a look at the economic data that came out this week. Jobless claims, initial jobless claims came in at 214,000. Forecast was 230, so that's really, really good. Continuing jobless claims came in at 1.385 million. The forecast was 1.375, so just 10,000 over. So again, not too bad. Housing starts came in at 1.439 million. And the forecast was 1.475, so it came in a little under forecast. And as you can see, we took a step back from last month's numbers. Industrial production year over year came in at 5.33. Previous was 3.91, so we did increase from last month, which is some good news. And existing home sales came in at 4.71 million. Forecast was 4.7, so just barely above forecast, but again, did take a step back from last month at 4.78 million. All right, well, let's breeze through today's market recap. S&P 500 rising on hopes of Fed Mulling slowdown in rate hikes. The S&P 500 jumped Friday as hopes that the Federal Reserve could slow the pace of rate hikes offset mixed quarterly results. Growth sectors of the market rebounded following a slump a day earlier as Treasury yields eased from session highs on bets that the Fed may consider slowing down the pace of rate hikes, but I think they're probably still going to do 3/4 of a point at the next meeting in a couple weeks. Quote, investors are now considering a December rate hike of 50 to 75 bips. In quote, Janie Montgomery Scott said, quote, prior to Sunday, sentiment was closer to 75 to 100 potential hike at the next meeting. This recalibration of expectations is what's helping stocks today, end quote. Apple and Microsoft rose, with the latter up more than 2% ahead of earnings from big tech next week. Microsoft's cloud business Azure is likely to take on added investor attention amid concerns the weakening macroeconomic backdrop is weighing on global enterprise and cloud spending. Snapchat parent company Snap, however, slumped 29% after the social media company reported quarterly results that missed both on the bottom line and withdrew fourth quarter guidance and amid slowing advertising spend. Snap is likely to be range-bound amid ongoing macro headwinds, Goldman Sachs said in a note. Other social media stocks fell sharply, with Twitter, Pinterest, and Meta in the red. Consumer discretionary stocks were driven higher by a rise in Amazon and a rebound in Tesla, following a slump a day earlier. Tesla's rebound comes even as concerns mount that Chief Executive Officer Elon Musk may be forced to sell more shares to fund the deal to buy Twitter. Well, we shall see. Musk may need to sell an additional $5 billion to $10 billion of Tesla stock should financing talks fall through this week, Wedbush said in a note on Friday. Energy was also among the biggest sector gainers, led by more than a 10% rise in Schlumberger after the oil field services firm reported better than expected quarterly results. So, not all bad this week. So, even though things can be a little rocky here and there, it is, like I've been telling clients at meetings of late, it's kind of a glass half full, half empty. Things aren't terrible, but they're not great. So we shall see where things go. All right. And the last thing I was going to cover today, yesterday we talked about the new tax rates for next year. The IRS has set new 401k limits. Investors can save a lot more money for 2023. Days after the Internal Revenue Service announced big inflation-related bumps to tax brackets and standard deduction payouts for 23, the tax agency is announcing sizable increases in the amounts of money savers can put into retirement accounts. People can contribute up to $22,500 into 401ks and $6,500 in IRAs for 2023, the IRS said Friday. For 401ks, that's almost a 10% increase from 2022's contribution limit of $20,500. For IRAs, it's a more than 8% rise from the limit of $6,000. So, and also the contribution limits that apply to 401ks plus 403b plans and most 457 plans and the federal government's thrift savings plans are even larger for workers at age 50 and over. Catch-up contributions rise to $7,500 if you're over 50, from $6,500. Combined with the catch-up contributions with regular contribution limits, the workers age 50 and over can sock away $30,000 for retirement in these accounts during 2023, the agency said. So that is definitely some good news. So, we'll see how things go moving forward. We do have, like I said, the Fed meeting coming up on November 1st and 2nd, and then we have the general election or the federal elections coming up on, I think, the 8th of November. I got my ballot in the mail just the other day, so I need to go through it and look at all the taxes and stuff that they want us to either approve or decline. So I'm sure you're probably getting yours in the mail if you get your stuff via mail like most states these days. So, all right. Well, that's everything I had for the week. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. And hope everyone has a good weekend. And I'll talk to you guys on Monday. Bye.